Hey guys, welcome in this new video. I hope that all of you are doing great. So very special video today. I didn't think I would make this video that soon into 2020, but here we are today. So in this video, I will basically talk about what happened this week on the market, especially for the US stock market. We had a pretty big drop, and I want to basically explain you guys the reasons behind this and kind of, just explain the situation to make it easier for you guys to understand. I asked you guys on Instagram if you would be interested to see this video, and a lot of you guys wanted me to actually do it and talk about this situation more in detail. So this is what we will do today. I will try to bring you guys as much value as possible. That is always my goal, and I'll be honest with you guys. At the beginning, I wanted to do this video only for my students in Reversal Master, but after spending some time thinking about it, well, I came to the conclusion that the drop on the US stock market will affect everyone, right? Not only my students, but it will affect pretty much, well, all of you guys who have investing, for example, on these markets, or who are trading these markets as well. So I thought that it would be more valuable and interesting that I post this video on YouTube so that everyone has a better understanding of the situation. So all I ask in return, is a little like under the video. I would truly appreciate it as always. Just before we get into it, I also want to show you guys my best trade of the year so far. So this was a trade on Euro GBP. I just closed this trade about 1 hour ago, right before basically recording this video, and it was a very good trade. So I had a buy from this level right over here, no, even a little lower, it was more around here, and as you guys can see, well, the market really went up pretty aggressively, and I have been able to close the trade around these levels here, as I said, not long. There might be some more upside coming, but at this point I want to be out of the market and wait to see what happened from here. As I said, the markets this week, not only the US stock market, but all markets were crazy. We had a lot of volatility. That was really like an insane week. And because of that, I want to be out of the market and wait to see what happens from here. I don't want to hold any trade over the weekend. We might get some pretty big gaps when we open back on Sunday night. So, for these reasons, and of course for other reasons, I am out of the trade right now, but that was a very good trade. I posted the screenshot on Instagram if you guys follow me here. Anyway, so let's get back into the content of this video, which is the US stock market. So I will use the S&P chart, but there are other indexes that you could use as well to look at this, and it's pretty much the same thing. So I have some notes right over here on my other screen, so if you guys see me looking up, that is the reason why. Okay, so first thing first, I just want to make you realize how big this move is, okay? Because I feel like some people saw the move, but they don't really consciously realize how big this move is and how crazy it actually got. So if we measure the move that we got, which is this one, right? So as you guys can see, a pretty big drop. If we measure this, it's 16%, right? Just a little under 16% drop on the US stock market in one single week. I don't know if you guys realize this, but it's a lot, right? Like it's not a small move at all. Even if you look at it on the weekly, look at how big this candle is comparing to all the ones that we got before. In reality, even when the markets got really volatile here back in 2018, right? The candles were much smaller than what we just got here. So that is a pretty big move, Even if we go back in time, and we look at, for example, 2008, which was the last major financial crisis. Well, even during that time, we got few candles that were about the same size. I think that this one is even a little bigger if we look at it in terms of percentage. But the move that we got this week is pretty much the same size as the big moves that we got in the last financial crisis. So that is a really big drop that we actually got on the market, which is why it is very concerning, I would say, and why you need to be aware of the information that I will share in this video and have a good understanding of the overall situation. All right, so that is the reason why I'm recording this video today. Okay, now one thing I would like to mention just before I get into it as well, and before I kind of explain you guys what's going on, I made a video about 3-4 months ago, I think, back in 2019. And in this video, I was talking about a potential crash, that it was coming eventually. I highlighted many reasons. Back in October, I went back to my college that I went. They invited me for a conference, and at this conference, I also was speaking about the fact that we could potentially see a market recession or even a crash eventually on the market. And look at what we're getting today, right? So I don't want to sound like a genius, like, oh my God, I predicted the crash, but in some ways I did, right? I knew that this was coming, and honestly, I'm not really surprised to see something like this. I was expecting that. I've made, even more than one video about this topic, and I knew that it was coming. It was just a question of when is it coming, but I knew that eventually we would get this. So I'm just saying this to show you guys basically the power of really understanding what you're doing, right? And the power of just understanding these charts and these markets. Because when you have this understanding, you are able to predict, these type of movements in advance, and you don't get surprised by them, and therefore you can survive into the long term, right? The goal of every trader should be to be profitable over the long term, And of course, in order to do this, you need to have, a good risk management, a good strategy, and all of that. But the main thing is really understanding in the first place what you're doing. So I hope that this video actually helps you guys with understanding more simply, these markets, as I said. Okay, let's actually get right into it. I know I talked a little bit about, different topics. Let's get right into it. So what happened, right? Well, the main reason, right, if we look at, for example, the news, and if we read articles online and things like that, the main reason that is behind this move is the coronavirus, right? So the coronavirus was first, detected in China, and since then it has been spreading all over the place, and it's really getting pretty big, right? So it has been around for I would say 2 months approximately. And at first it was not that concerning, right? I mean, it was just a new virus that was spreading, but it was just in China, and people were not worrying too much about it. We did not really see that much impact on the market. It did impact a little bit, but nothing that crazy. But then last week, right, as you guys can see, the market really started going down aggressively. So what is the reason, right? Like, what made this change so fast in terms of momentum on the market? Well, the reason is pretty simple. It's simply that the virus started spreading much faster in many different countries, right? So as I said, at first it was only in China, but then it started spreading, in the US, in Italy as well. There are a lot of cases now there, and pretty much all over the world, and it's really getting concerning because it has a big impact on the economy, right? Not only for China, but for the whole world in reality, like even in China, there were places where people were not working for weeks, and it has a really, really big impact, on all the big businesses and, people who, have physical products and things like that. Like, it has a huge impact. So that is one thing that is important to understand. It's not just the virus in itself that is important. It's what is the impact of this virus, right? So for example, if the virus was not spreading that fast, or if the virus was not already all over the place, the impact would not have been the same. So it's more the consequence that is important, right? And not just the event in itself. So that is a really big piece of information that is important to keep in mind in any situation, right? Like, people tend to focus so much on what's going on, but what is even more important than what is going on is actually what is the consequence of this special event, right? And so when you get into this type of reflection, it already helps you much better to understand the situation. But basically, as I said, the virus started spreading all over the place, and it really, is starting to affect the economy, and the markets are also starting to, catch up on this virus, right? And that is what we are seeing right now on the market. So that is kind of the, let's say, fundamental analysis, if we keep it simple, behind this move. And there are other reasons as well that I spoke about in my other videos. So for example, if we just look at the economic cycles, that is one thing that I was talking about before, but basically the average growth that we see on the US stock market is between 5 to 8 years, and then we get a crash or a recession. And here it has been over a decade that the market has been going up. So we are already way beyond the average economic cycle. And that is also something that was playing against the market. And the reason why is because, over the time, even if nothing was happening on the market, right? Nothing really particular that was telling us that the market would go down. People, were starting to catch up on the economic cycles, right? And people were starting to think, it has been rising for 10 years. Eventually, it will probably go down. So it plays into the mind of a lot of people. And that is another reason why, this move was such a big move and it had a big impact. It's because a lot of people were already either on a conscious or on a subconscious level already forecasting that the market could go down eventually. So that's another reason. Of course, if we look at it now from a technical perspective, we were at an all-time high, right? So that is, also something to consider. When the market gets to an all-time high, it always, no, I would not say becomes more risky, but it becomes, a little bit like people are watching it a little more carefully, right? Because since we're at an all-time high, well, there's a lot of room for the downside, right? Because the market has never been that high before. So it's another thing to also understand. So if we take all of these basically components and put them together, that is basically what happened. And so the virus was kind of the thing that accelerated everything, right? So, as I said, we could already have been expecting a recession or a crash, just like I thought it would happen. And the virus is kind of what accelerated this whole situation and just made it a reality. So that's kind of the idea. Okay, now another concept that I want to talk about related to this, and that is a very, very important concept. I'm sure some of you guys already are aware of this, but it's the idea that markets hate uncertainty, right? So when there is a situation that is uncertain, right? That we don't know how it will develop and we don't know how far it could go, just like the virus, right? We don't know how many people will be affected by this. We don't know how long it will take before that they find a cure for it, right? Like there's so much unknown around this, and the impact is already so big that it creates a high level of uncertainty. And the markets hate when there is uncertainty, right? It's kind of common sense when you think about it, right? Let's say that you have a lot of money in the US stock market and the situation is very uncertain and it could go both ways very aggressively, right? What are you going to do? Well, if you are if you are conservative about your investment, you're going to close your trades, right? If you think that the market could, go against you very strong eventually, maybe for the virus or something like that, and if you are if you have a conservative approach, you will not want to keep your trades, right? So it creates uncertainty about the market, and this uncertainty actually pushes people to make a decision, right? To close their trade, for example, or maybe in some case people were selling the S&P, right? That is another thing that traders are doing as well. If they think that it can go down, they might want to get into a sell, right? So it creates a uncertainty around the market, and that is also, of course, playing against the US stock market. Now, another concept, okay, that is kind of, I would not say similar, but that is important to understand as well. So listen carefully here, guys. I'm telling you that's very important. When there is uncertainty, right, on the market, the balance between people who are buying and people who are selling starts to move, in the majority of people who are selling. Now, one thing here that is really important to understand. When I say that there is more sellers, it's not necessary that people are selling directly the market. It's more that people, as I said, are closing their buys, right? So if we look at the transaction in itself, right? Let's say that you take a buy and let's say that you close the buy, right? What is this transaction? Well, the transaction of closing a buy is the same transaction of opening a sell, right? When you close a buy, you are selling whatever amount of the position that you have. So if you didn't have a buy in the first place and you would do the same transaction, it would be a sell, right? So when we say that there is an imbalance between buyers and sellers, it's not necessary that more people are selling the market, even if it could be the case, But what could also be the case is that people are closing their buys because they don't believe that the market will continue going up. Okay, so if we look at the S&P, for example, on the daily, right? I will just use this example here with this trend that we had, right? So we had a trend line here that was in place, and as you guys can see, the market just broke through the trend line, right? So what happened here? Why the trend was not able to hold the market and make it go back up? Well, the reason is, as I said, we had the virus that started spreading, which create a lot of uncertainty on the markets, and people were kind of starting to fear what this could lead to in the situation. So the market goes down pretty aggressively here, as you guys can see. And now the question here is, when it gets to the trend, right? Is there more people that are buying or more people that are selling? Well, in a normal market condition, we could say that more people are buying, at least on a probability standpoint, right? When we get to a trend, especially if the trend has been touched, maybe 2 times before, there is quite a good probability that the market will at least get a small reaction off of this trend, because a lot of people will be buying around this area, right? So this is what happens in a normal market situation. Now here, the reason why the trend was not able to hold is because, as I said, the virus started spreading around. It creates uncertainty. People are starting to close their buys, and people fear the market, right? And that is another point that is really important. Fear is what drives that type of move, right? So people start to fear, they start to close their buys. No one wants to get in the trade here because everyone is just, saying, oh, I'll wait to see what happens, right? Which is very logical. I mean, if there is a big virus spreading all over the place and everyone is kind of panicking and worrying about this, it's probably not the best time to get into a buy just because of a trend level, right? So everyone is kind of worried, people are kind of waiting, and boom, we break out of this trend. Now, what happens when we break out of the trend? Well, everyone that was thinking that the market could go back from this trend, now that it's broken, all of these people are also out of the market, right? So let's say that you took a buy around this level, it goes up, it comes back to the trend, and around this level, you're like, okay, I'll wait and see what happens. I'll wait and see if the market goes back up. Then you wake up the other morning and we're here, right? The trend is broken. So now you're like, oh shit, the trend was not able to hold. Okay, let's close the trade. So once again, what happens when these people close the trades? It creates an imbalance on the market, right? More selling. Once again, it's not that there is more sellers necessary, it's that there's less buyers. And so if we, just kind of repeat this process over and over again, this is what creates a crash or a recession, or at least a very strong move, just like we got here, right? So I try to make my explanation as logical as possible so you guys can follow along with me, right? So just to recap what I just explained, the virus started to spread around. People were already expecting a potential recession or a down move eventually, right? Because of economic cycles, all-time high, and all of these things. So we could retest the lower levels eventually. So the virus starts to spread around. It creates uncertainty on the market. Some people start to close their buys. It creates an imbalance on the market. Then it comes down to an important level that people would wait and see what the market would do around this level. And if we zoom in, we will even see that this candle here was the smallest candle in all of this move, and that is the reason why around this level people started to wait and see what happened, as I just explained. Then we get the break of the trend. More people start to remove their trades, which means that the balance between the sellers and the buyers gets even worse, and it's just a conscious cycle that repeats itself, right? Like, we can take this explanation and just see it repeat over and over and over again. Then you have fear that jumps in, right? You lose hope on the market, right? And so it just gets in a pretty crazy situation like this, right? So it's all of these factors that when you put them together and when you understand basically the reasoning behind all of this and what I just explained, that you can understand that type of move on the market. So that is basically my explanation behind this move. I tried, as I said, to make it as simple as possible so all of you guys could understand, and just try to bring you guys as much value. So that is basically how I would formulate my explanation of this move. Some people may look at different things than I do. Some people may have different opinions, I would say, but I really try to give you guys the facts, right? So what is actually happening and what is basically the reasoning behind this. And if you study the past economic crashes and things like that, you would see that it's the same kind of explanation. It's always the same thing, right? There is a situation happening, it creates uncertainty, people start to close their trades, imbalance, it goes down, imbalance, and it just repeats, and there we go, we have a crash, right? It's always pretty much following this kind of explanation whenever there is a crash or a recession. As some of you guys know, I've been to college before being a full-time trader, and in college I did study finance and economics, right? So I'm not the most knowledgeable person ever, but I do have some pretty good knowledge when it comes to economics, politics, and things like that, and understanding the overall picture because I've studied that for 2 years, right? So that is kind of the idea. So I hope that you guys got value out of this video, and I hope that my explanation was clear enough. I tried to make it as practical as possible, even bring you guys on the chart to explain my thoughts. So if you guys have any questions about this, don't hesitate to either leave a comment below or message me on Instagram. It will be a pleasure for me to help you even more if you need it. And if you like this video, don't hesitate to leave a like. Once again, I would truly appreciate it. So on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.